All right, let's take a look to the markets now with Moriarty, the senior investment strategist at CenterSquare Investment Management. Thank you very much for joining us.
Thanks for having me, Roger.
You have some optimism for as we look at things like global growth. It's going to slow but steady. What's your reasons for some of the optimism right now?
I think where we really are at this point is that we are seeing a little bit of stabilization, slowing to your point, but still relatively healthy. And I think a big part of that really around the world has been this consumer base that has remained a lot more resilient than we expected. And so I think that's really helping. The other piece as well is this really large build out from an infrastructure perspective, whether it's digital infrastructure and you think about the impact of AI and what that means around the world, but also just regular infrastructure, right? We're seeing infrastructure spending around the world, and all these things are really playing into helping growth remain relatively stable, though slowing a little bit from where we have seen this past year.
And with that consumer resilience, because we hear horror stories. There's layoffs. There's nobody's moving. There's not hiring. Concerns about inflation. Where's that resilience coming from? Do we know?
I think it's really this K-shaped economy that you are seeing, right, where you have the higher end of the consumer that has been benefiting from things like asset valuations. You're seeing the housing market really, really strong. You're seeing values across the stock markets really strong. That asset is really helping the high-end consumer continue to be strong across the board. And at the same time, you're seeing the other side of the economy, the lower-end consumer, continuing to really struggle, because although inflation has come down around the world, it's still at levels pricing wise elevated compared to where it was 3, 4, 5 years ago. And so you're seeing the lower end consumer being a little bit stretched from that perspective, but you do see this K-shaped economy where that higher end consumer is continuing to spend, and that's really helping buoy the entirety of the economy. But to your point, from the labor market perspective, that is an area of concern, right? If that is something where we see a large amount of layoffs, for example, or we see a big correction in the stock market associated with kind of this potential bubble for AI that a lot of people keep talking about, maybe that comes off. If you see asset valuations really hurting for the higher end consumer, I think that really brings down consumption, and that would be a hit to economies around the world. But as far as we can see at the current moment, it seems like the current environment seems like it could continue for the foreseeable future here.
And now one of the things people have to buy, or don't have to, but often do, real estate. You either have to own somewhere to live or you rent. It's an interesting place right now, isn't it?
Absolutely. I mean, I talk about real estate, and that's what we do here at CenterSquare. And it's an asset class that provides a lot of stability in otherwise areas where you might be concerned, right? So take this AI potential bubble that you keep hearing people talking about across the equity markets. Global REITs around the world are trading at meaningful discounts compared to equities versus their historical levels. They're trading at levels that we saw kind of after the global financial crisis. So think about what that particular environment meant for real estate. And that's where we're trading from a valuation perspective compared to global equities. And it's a really great opportunity, I think, for investors to find a little bit of what real estate offers within a portfolio, which is the cash flow, it's the inflation protection, and it's doing so from that liquid equity market perspective. So global REITs look really interesting here today as we see a lot of valuations being stretched across the broader equity market.
Now, are there certain areas that are looking better than others when it comes to the global REITs?
Absolutely. I think where we're really focused on is identifying areas that have secular growth. And by that, I mean things that might not be impacted based on what happens with the economy, right? So I mentioned from a labor market perspective could be a risk for the consumer. However, there are aspects of the global economy that are going to continue. And one of those areas is what's happening from the aging population around the world. We see that here in the US in a really material way, impacting the growth that we're seeing for senior housing, for example, within the real estate space, where you are seeing record levels of aging into this needs-based type of an environment from a real estate perspective. And there's essentially no new supply of senior housing. And we're seeing this lack of supply across various different aspects of the real estate space. But I'm highlighting this from a senior housing perspective because this increasing demand coupled with this low supply is creating some really phenomenal growth associated with the income that's being generated out of senior housing real estate. And so that's an area that we're really optimistic about. It's an area that I don't necessarily see anything really hurting the story in the foreseeable future because new development still does not pencil. So we don't see a new supply wave really impacting fundamentals. And at the same time, you see this demand continuing, right? We're really just at the very beginning of this massive wave of the aging baby boomers that are going to be coming into this demand driver for senior housing.
I was going to ask, but you just answered that question about you see that wave continuing. What about going back just to the bigger picture for a second? You said it's trading at 30%, I think is the number. You didn't say it, but I think it's the number you have written compared to historical levels. Is there more room for that to drop, or are you thinking it's maybe starting to hit the upswing again?
I think what we have seen over the last couple of years is a lot of concentration within the market. And I think we're starting to see that breadth kind of normalize. The other piece that's going to be helpful for real estate really is a normalizing interest rate environment. What we have been dealing with in real estate over the last several years is kind of the onset after the pandemic. You saw a really strong drop in interest rates that was followed by a really sharp increase in interest rates to fight inflation. And that the uncertainty from an interest rate perspective is not great for real estate, right? It is a somewhat bond proxy in the listed environment. And so now that we have a little bit of stability from an interest rate perspective, I think that really creates a great environment here for REITs around the world where you have a bit more certainty in terms of what's going to happen associated with interest rates. And I think that's going to create an opportunity as the market breadth kind of expands here for REITs to start participating in the global marketplace.
Okay, we're going to have to leave it there, but Uma, thank you very much for joining us.
Thanks for having me.
Uma Moriarty is Senior Investment Strategist at CenterSquare Investment Management.